COSM bears continuing to push this to the downside. Now, where can this stop? Where can we find a bounce? Well, there could be an answer within this video. Let's go ahead and validate that now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COSM technicals, raw price action, and some statistics. So before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at COSM in the bi-hourly chart here, and we're going to start off with this immediate short-term time frame analysis with the ARC-Series Crypstex indicators, which are live now and can be acquired by you. Just send me a DM and we'll go ahead and go over some of those details. Okay, so so we're going to start off with the DBSI first, which is a statistical based indicator taking a cumulative score of every single candle, thus giving us a score right up here in this bar. So as we can see here on the bi-hourly chart, the bears are actually winning by 20%. So we are looking at a potential continuation to the downside. Another thing is that DBSI considers bearish action as long as we are below the 13-day exponential moving average represented by this yellow line here. Now, another indicator that is a part of the Crypstex indicators, the ARC-Series, is the ARC Enhanced MACD, and it is freshly printing a bear signal here for a continuation to the downside. Okay, so that is actually something that's pretty concerning since we are in the bi-hourly. So this is making me feel like we are going to fulfill, or we're going to maybe touch on the targets that I've been talking about for now a few videos. Let's move on to the next chart and see what I mean by that. Okay, so first of all, for the new view, I haven't actually ran a back test, but this is now making me feel like I actually have to run a volatility versus momentum profile back test. So in this case, new viewers, you're looking at volatility here represented by this indicator BBWP. Volatility is direction neutral, so we pair it with an indicator similar to this one here, which is called stochastic momentum, and it's actually proprietary to TradingView software and free. So actually, by the way, the link is in the description below if you would like to start an account with TradingView. I think they give you like a $30 sign-in bonus, but I mean, making an account with them certainly helps me out. Please check out those links if they are calling you. Okay, so the reason why I'm bringing this up right now is because the pivot on the volatility component, which is this spectrum line, it is actually starting to make another expansion phase. So it's rejecting its contraction and wants to make another expansion phase to enter into the critical volatility loading zone here, which I consider to be anything above this 90% trend line here. So if this is starting to make that expansion phase back into critical, stochastic momentum is actually now in an oversold percentile. So this can potentially face a continuation to the downside since it is suggesting downside, which, by the way, I've actually ran a back test on just this indicator on several tickers, and I'm getting about a 75 to 91% accuracy in guessing the asset's direction. So it's not perfect, but it's very good to consider its odds. Okay, so this is suggesting a continuation onto the downside, which is very much in accordance actually of what I've been talking about, of potentially coming back and testing this newly converted resistance into now support before a continuation onto the upside, per the traditional playbook rules of a descending channel, which usually is I talk about this all the time. It's actually the golden rule of three. So usually we have 3 tests of the resistance followed by a true breakout attempt on test number 4. But on that breakout, we definitely need to come back and validate this as a valid form of support before continuing on to the upside. Okay, so in this case, momentum is suggesting a continuation to the downside. It looks like volatility is starting to expand, rejecting its contraction phase, and it's going to start to come right back in here into critical loading, which is potentially bullish for COSM, but I do expect some downside coming in. Let's move on to the next the next chart. So this is the chart where we were looking at this head and shoulders setup here, and in the downside process, we actually were able to catch a descending channel. Usually descending channels, just like this one over here, present a bullish outlook and an upside continuation in general. So we are on the 4-hour chart here, and just based on looking at this candle structure here, this candle print here from today is actually a 4-hour print of nothing but red, and it hasn't returned anything from which it has lost thus far. Okay, so this in all reality is making me feel that we are trying to do the whole three tests of the resistance here. So we have the test number 1, 2, and 3. Usually test number 3 presents the biggest capitulation event from all of the tests. Usually that gives the short positions or short traders, or short bias traders, sorry, the opening. They usually would open right at this trend line here as a resistance. Confirmation would be led by this candle here, retesting that resistance and failing it. So short positions open here, leading this all the way to the downside, and I can actually see a first stop being potentially at the 26.36 cent zone. So 26 cents would be right about the area where we can find a bounce, potentially come back and test near the 1.272 before continuing on to the downside and eventually testing the range between. This is a massive low, okay, but I'm saying this because I want you to remember this number too, okay? 1875, which is just about 19 cents, okay? So 1875 and 2138. This range is of incredible importance, and we will certainly get to it in due time. Let me just go ahead and draw a box here so that we can see our relevant area of support and or demand zone before a continuation to the upside. Okay, so yes, I definitely see a first stop coming in at about 26.36. We can even load some SMAs just to see how much resistance we have. Okay, so the SMA 200 right here is actually serving as a confluent support alongside the 1.618, which is already a golden mean. Okay, and the trade likes to actually take this the price action down to this level here before a quick recovery, and then we can actually continue on it on the descending channel's true nature or the playbook rules, and realize that 2.618 golden mean at about 1875 before a bounce to the upside. It wouldn't be, I'm saying just because it's 2.618 that we could reach that low, but I mean, in all reality, we could find the bounce just right down here at the 1.272. It depends on how fast the thrust to the downside is. If it is in the next 4-hour candle in the early pre-market, yes, we can actually come back down and use the 2.272 at 2138 as a form of support before validating the support bottom of this channel, thus continuing on to the upside. However, if the sell pressure does take time and it slowly declines, we can actually see by tomorrow end of day the 2.618 at 1875 before that bounce of recovery. Okay, so there are a few variables as to how we can actually trade this, but I would essentially be looking for some type of, I'm not a financial advisor, okay? So please take what I do show and iterate within these videos as a form of entertainment only. I can't suggest for you to buy or sell any assets, okay? So please do your own DD and we'll be okay, you guys. So my potential entry zones would be essentially between this 2138 at the 2.272 fib ratio and the 2.618 at 1875. That could potentially be a great area for entry before continuing on to the upside. Now, if we can go right back into this channel here, testing, which is what I'm suggesting, of coming back to test our newly converted resistance into support, please take a look at what that bottom target looks like. The numbers are actually right over here. You know what? I'm gonna just make that a little larger because I am getting some complaints about not being able to see the digits on the right since people are on handhelds or on cell phones here. So please, yeah, just take a look at that target there. If we were to come back and test that support, we're looking at 18 cents. Which is very much in confluence with what we're talking about here at the 2.278 at 1875. So the support bottom is 1801. This is 1875 right here. 18 is starting to appear a lot. Okay, now this is the descending broadening wedge that we've been riding for some time now. Okay, so we are using this area still that I continuously mention to you guys. You know, the regular listeners know that I leave my gaps. I leave my gap ranges in place for future play. And as you can see, it's so much play within there. These are daily candles as we're on the daily chart. Okay, so if we actually go right back down to this SMA 50, I gotta show you something else too first. But please listen up. Okay, the SMA 50 is suggesting stop at about 2184. Okay, so please 2184. And now if we zoom in very closely, this ridiculous little gap here could actually be serving as a psychological component for us to actually make a move to the downside. And where is that located? The bottom side of this gap is 1878. So between this gap bottom of 1878 and the SMA 50 at 2184, let's go back and take a look at that support zone down here. 618, 1875. 272, 2138. Come on, guys, subscribe to the channel right now. Give ARCa a freaking like. Okay, come on. We're looking. So this is too much rhyming for us not to go there. The only way that this is going to be invalidated is if like the catalyst comes in to where they say, oh, you know, Elon bought Cosmos, and then this thing rocket ships to the upside. That's, you know, some type of fundamental catalyst would be the only way of invalidating what I'm telling you right now. Okay, so so please know that. And I'm also trying to be as quiet as I can be because my toddler is actually taking his nap right outside of the studio here, so I can't be super loud and super excited because like I'm seeing a potential bottom here, you know, and I'm seeing what could be the bounce area for us to just, you know, rocket ship to all kinds of Saturn and Moon and whatever. Okay, so the last chart here, we're gonna just open up the RSI profile, and we are we're looking like it's gonna, you know, we're looking bearish. It's, you know, it's looking like it's gonna happen, like what I'm telling you. Okay, so first of all, for the new viewers, new listeners, this is these are the RSI properties, the diagram I drew here for you, and these are the 4 zones that I would like for you to focus in on, as they are located right over here. Okay, this is just for, oh wow, sorry, this is just for your convenience. So the 30-minute immediate short-term time frame is suggesting a downside continuation. It has been using the 14-day moving average, which is proprietary to any of these RSI profiles. It's stock. It's usually it just is that way unless you change it in the settings. And the RSI signal is the purple line. So we have now entered the bear strength percentile, and the moving average has been used as a form of resistance and suggesting a continuation to the downside. Please know that as long as we're in the shallow areas of this zone, the gravitational pull towards the upside is likely. Okay, so it's still there. I mean, the thing is that we don't know how much thrust is happening towards the downside, so the gravitational pull back to the upside could be verified with actually probably an algorithm. So that's actually the physics of trading in this particular case here. Okay, so now the buy hourly is suggesting a continuation onto the downside, and as you can see, if I can zoom in just a little bit, the buy hourly has made a bearish cross below. Now now we're trading below the moving average, which is pretty bearish. And but please remember, as long as we do remain here in this shallow area, the gravitational pull to the opposing zone is likely. However, now we don't have just a junction between the weakness percentile and the strength percentile of the bears. Now we do have the moving average as a form of resistance, which can likely be tested, and we can continue on to the downside. 6-hour RSI is suggesting a continuation to the downside. However, it is very, very weak, and it's looking like it's slowing down that downside pivot as well as the moving average. Let's just go ahead and zoom in just a little bit. And as you can see, the moving average is actually, if you can just take a look at this, right where the cursor is, I'm going to move it out of the way and look at the kink, okay? See that kink? Right there, it looks like it's already starting to change its form. Okay, so in this case, We do have to watch out, though. We do have to watch out since we're right at the junction between the weakness percentile and the strength percentile of the bears. This usually means a gravitational pull into bear strength. Okay, so this is all of these bearish RSIs are in accordance of what I'm saying, of a continuation to the downside to test this area here. Okay, so that could be our potential stop and bounce area or terminal shakeout per Wyckoff theory. Okay, so and now in the daily time frame, this is what's catching my attention. The fact that we're actually rejecting the bear weakness percentile and we're just doing this like moon dance here, actually, and it's suggesting sideways trading as well. Now we are getting a slight hint from the moving average. It is suggesting some slight downside. However, I mean, also we're way below the moving average, so there is a potential to where we can actually face a continuation onto the downside. As long as we're in this shallow area, like I keep saying, the gravitational pull is likely right back into the opposing zone. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave the links in the description below for you to consider joining the trading community in Discord. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.